Going on, everybody? Welcome to day 29 of the Trading Academy. Pretty crazy that we're on day 29 already. We're on the 5th week. I hope you guys have been enjoying the Day Trading Academy so far. I intend to continue this as long as I can, showing you guys everything that I know, giving you guys cookie cutter models and stuff like that, which is going to be next week. We're going to get into the advanced stuff, but this is the final week for the intermediate lessons. And we're going to be getting into all the advanced stuff. So if you guys are enjoying the Trading Academy, please like the video, subscribe, leave me some comments on what you guys want to see. If you guys have any questions so far on any topics that we've covered so far, drop them down in the comments below because I can make a dedicated video to anything you guys have questions about, right? So if you guys also want to join the Discord, I have a free section that I recently opened that you guys can come in here and talk to me, get direct communication with me, and I can answer any questions that you guys have. But in today's video, we're going to be going over daily bias. Real quick, I forgot to plug this in, but if you guys want to join the free section of the Discord, link will be in the description down below. Anyways, we're going to be going over daily bias. Now, we're going to be going over some ways to try to determine daily bias. What is daily bias, right? Daily bias is basically going into the next trading day, and you are going to determine whether you're bullish or bearish, whether you think price is going to go higher or going to go lower for that giving trading day, right? Now, let's say, I'm trading New York session. Do I think the price is going to go higher for that New York session? Do I think the price is going to go lower? That is basically your daily bias, right? You're just going to come into the new day, fresh mind, fresh everything, and you just have to determine whether or not you think price is going to go higher or lower. And there's several different ways to determine that. I'm going to show you guys a couple ways to determine that. And we'll start with the most simplest one. So all you got to do is just look at the previous trading day on the daily chart, right? You want to look at the daily candles. You want to wait for daily candle closures. You want to wait for, you just want to look at the previous daily candle and wait for the current daily candle's closure. For example, like this one right here, we'll actually use Friday's candle right here, right? So if we're looking at Thursday's trading day, right, we sweep the previous daily low right here, and then we close up here, okay? So the next trading day, you can assume that we are bullish because we swept the previous day low. So the next place of interest would be the previous day high, right? We didn't sweep it on Thursday, but then the next day we could assume that we are bullish because on the lower time frames, if I were to go to like the 4-hour, this is your drawn liquidity, right? And then we open up the new day, we sweep it, but we could assume that we are going to continue bullish because we have swept the previous day low, and we also have higher time frame drawn liquidity. So our drawn liquidity up here, and just noticing the displacement of these candles, we're pushing up. We clear the previous day high, and we also have we have relative equal highs up here that we never cleared out for the week. So if we're just looking at daily candles again, we sweep the low, we wait for the closure, it closes up here, this daily candle opens lower, we push up, we take this liquidity, and now when this daily candle here closes, it closes above the previous day high, right? So it closes above this, right? A full body candle closures. And remember what I said about the candlestick video is that you want to wait for these bodies, right, to close. You want to see where the body closes, because where the body closes is going to be very important. So whenever we close a body above the previous day high, we can assume that the next trading day is going to be bullish. Our job is just to try and catch the daily wick to the upside, right? Since Friday closed above Thursday's trading day, and it closed above Thursday's high with the full body candle closure on the daily, and we close above all this liquidity here, we can assume that this bullish uptrend is going to continue, right? We break in structure above this short-term swing high, and we're closing a body above all this liquidity here, right? So this is not a liquidity sweep. We're closing a body, so we should be bullish for the next trading day. Again, our job is to get in somewhere on this daily wick, right? If I start zooming in, there'll probably be other entry models that you can get into. But this is the most simplest way you can determine daily bias, right? And with daily bias, you have to incorporate drawn liquidity. You can't just use this by itself. You have to have an understanding of drawn liquidity and where price is most likely going to go. Okay, for example, over here, we have all this drawn liquidity down here, right? We have all these lows right here, all these juicy lows. As you guys can see here, we have relative equal lows there. So if we're using this candle right here, we note that the trading day right here on, what is this, Friday? I believe it's Friday. Didn't sweep the previous day high, didn't sweep the previous day low. So we'd have to wait to see what Monday does, right? And if our drawn liquidity is lower, then I'm assuming that we are going to be bearish on several different factors, right? Just due to the fact that drawn liquidity looks like it's going to be lower because we have equal lows right there on the lower time frame, right here, right there, and then we have this swing low over here that's not swept yet. So as you guys can see here, Monday opens higher, right? Our job is to get somewhere here in this wick, and we take it to the higher time frame drawn liquidity. So we close a body below the previous day low, which is Friday's price action right here, right? Friday's low right here. We close a body below it. We close a body below the liquidity, the sell side right here. And then we can assume that the next trading day is going to be bearish. However, it was not, right? It sweeps the previous day low, and then we close in the lower part of this daily candle right here. Now, the reason for this is because sometimes when you get, like on Monday, sometimes when you have like a very large move like this was from the high to the bottom, this was a 500-point move. When you have very, very large range moves like this, if I go to the 4-hour, this was a very, very large move, right, in one session. So whenever you have very big moves like this, like over 300, 400 points in a given day, especially in one session, which was the New York AM session, you'll usually get consolidation or sideways movements the next day like this. It's very low probability. You can also find trades here in the lower time frames, but you know, I personally don't like doing that. You just proceed with caution whenever you see something like that, okay? So we wait for the next day. Wednesday obviously closes below the previous day low. We close a body below it. We sweep this sell side, but we also have more down here, right? So what do we think about Thursday, right? We close the body below the previous day low, so we assume that Thursday is going to be also bearish, and it also is. And look, we close a body below Wednesday's low, right? Boom. So we can assume Friday is going to be bearish as well. We also have the drawn liquidity very close to it. We're super close to it. So Friday opens high. This little wick right here pushes all the way down. We tap into this fair value gap and order block right there, all the way to the left. Remember what I said about fair value gaps? You guys can use them as a form of drawn liquidity. Okay. All right. So that's one way you guys can figure out daily bias, right? You just look at the previous day candles. Is the current day candle closing above the previous day high, or is it closing below the previous day low? And whether or not it closes above or below, this is how you can find your daily bias. That's just a very simplified way of finding it. Another way of finding it is if you go to the 1 hour, I have this little indicator here. I know I said I don't like indicators, but I have this little indicator here called ICT Everything by Cold Brew Rosh. And this gives me my midnight opening. So the idea here is to look for price to be under midnight opening, especially if you get like a daily candle close above the previous day and you're looking at the new trading day. And if you're bullish, you want to look for price to trade below the midnight opening, right? And I'm talking about Eastern Standard Time, right? Again, you always want to have your thing on the New York time, okay? Because I am referring to everything here in New York time, in Eastern Standard Time, okay? So if we're trading below midnight opening, right, which is the opening price at midnight, obviously, if we go below that, and we're also under the 1800 opening price, which is when the new daily candle opens, okay? It's at 1800, which is 6 p.m. Eastern Standard Time. That is when the new daily candle opens, okay? When that opens, and if we trade below it, and then if we're also below midnight opening, we are going to be in what's called a deep discount. This is where the daily wick forms, right? So if we go to actually, let me pull up this little indicator here also, because you'll just see it way, way better. If I pull up the PO3 and change this to the daily, I know this might seem like a lot right now, but just trust me here, the daily. Okay, so midnight opening, we go below it, right? So this is the wick. This is where you want to try to ideally get in on if you are bullish, right? You want to try to buy below midnight price and below 1800, right? Because this is a discount in the current daily range. I hope I'm making sense here. I know it's a lot, but this is another way to try to determine your daily bias is if you are bullish, if your higher time frame, right? If your higher time frame is telling you that we are most likely going to go higher, right? And then if we start zooming in, obviously, on the next trading day, you want to look for price to be under midnight opening and under the 6 p.m. Eastern Standard Time opening, right? So obviously we get below here, right? And you can also just find trades when it's under 6 p.m. as well, right? If it's above midnight opening but it's under 6 p.m. as well, this is a good spot to try and find trades, okay? Because this is considered discount, right? This is considered the daily wick still when you're under the 6 p.m. opening price, right? Because it opens here and then it forms the wick, and then we can come up into here. And if it's going to go higher than 6 p.m., then this is where you're going to start forming that high, right? From the open, low, high, close. I know this is kind of confusing. You guys might be a little overwhelmed here, but I want to try to keep it super, super simple here for you guys. So again, if you have a higher time frame draw on liquidity, like on the daily, the 4 hour, and you start noticing that, okay, so we have a high up here, right? We have a high right there that we could potentially target right here on this buy side liquidity. We have a target right there. So the daily, right, just closed above this full body closure above that. So we can assume, right, that the next daily candle is going to continue higher, right? It doesn't always happen like that, right? It does not, like, it's not 100% accurate that, the next daily candle is going to open just because we closed the body above the previous day high, right? That's not what I'm saying here, but it is a very good indication that, we are on a good uptrend and we're going to continue higher, because on the 4 hour and even daily, all this liquidity up here looks like that's where price is going to draw to, just based off the displacement and speed in these candles, right? So if we go to the 4 hour or the 1 hour here, I'd like to see, like, for example, if we, let's just make up a little scenario here. So here's midnight opening. So here is the next candle that forms here in about 2 hours is going to be the new daily candle that forms. So ideally, if I'm bullish, I would like to see price be below the 6 p.m. open. And then obviously, we have to wait for midnight. And ideally, again, I'd like for this to come down, maybe sweep some liquidity, and then we can continue higher. And this would be the daily wick. And then the opening price of the new daily candle would be there. And then we would look for price to take out this liquidity here, right? And then we close somewhere up here, right? So for example, this is the opening price right here for the new daily candle. Ideally, I want to see it under it. And then midnight, ideally, I want to see it under it again. And then we come into New York session. We don't need a sweep on liquidity, but I'm just saying, like, if we do get one, that'd be awesome, because we're running people's stops from Monday, people that were, long Monday or whatever. This is also Monday's low. So we're sweeping the previous day low, and we're going to continue higher. So we get the open, we get the low, and then we push up and we form a high somewhere up here. Usually the high will be formed after we sweep some sort of liquidity. And then, we close off and hopefully close a body above the previous day high. So that is also another way to find daily bias, is just, looking at the 6 p.m. open and the midnight opening, and ideally trying to buy under it if you're bullish, and vice versa if you're bearish. If you're bearish, you want to buy above it, okay? I hope that's making sense. I know I'm kind of yapping a lot, but the most simplest way is just looking at the daily candles and looking at the previous day high or low, and whether or not the current daily candle closed a body above it or below it to determine your bias for the next day. And then you use that 6 p.m. open and the midnight opening to try and find, a lower time frame entry. Ideally, you want to be below those two. Again, if you're above midnight but below 6 p.m., that's also a good place to enter if you're looking for, entries and stuff like that. So that is how I determine daily bias. It's super simple. You guys will understand it a little more as soon as you start progressing and stuff. Actually, let me see if I could find an example really, really quick. I think that would help you guys a lot. So if let's just use Friday's example here. So actually, let's use Thursday, right? So if we're looking at Thursday's range of last week, right, we sweep the previous daily low and then we push up and we close here, but we didn't close above the previous day high. But if I go to the 1 hour here, this is going to be our draw on liquidity, right? This is going to be our draw on liquidity, because we see that Thursday sweeps the Wednesday low, which is the previous day low, and then we start pushing up with speed and displacement, right? So this is going to be our draw on liquidity, and then all these highs are going to also be our draw on liquidity, right? Because looks like we're pushing up. We swept the previous day low, so we could start looking for potentially us to reverse to the previous day high as well, right? That could be a target, and this on the lower time frames is a swing high, and this is our draw on liquidity. So this is where the new candle opens, right? Now, the opening price for this is going to be, let's see, 17,744 and a quarter. So this is the opening price of the new daily candle, right? And then midnight price or midnight opening is going to be right here. So this is midnight opening here. Let me go ahead and put it right here. This is the midnight opening, right? So this is the new daily candle opening price, and this is the midnight price. You see how we get below it, both of them, right? We get below midnight, and then we get below 6 p.m. This is ideally where you'd want to enter, but I know a lot of us aren't up during London session, so you'd wait for New York session, because that's what I trade personally. I'm pretty sure a lot of you guys are trading New York session as well. So a lot of the times you guys won't be able to catch the exact bottom, which is totally fine. But as you know, as time continues and we wait for the next New York session, right here is usually where I'm up already. I'm up in the morning around 6, 7, 8 a.m. And this is obviously a news release, but you can find an entry somewhere around here, right? Early morning pre-market for NY session. And now if we go to like the 15-minute, you guys could try to find an entry around here, right? So like, just to keep it super simple, if we're just marking out the current daily range, like when you wake up and you see all this price action here, you can mark out your Fibonacci or your gone box to find out discount and premium, right? And you guys will see that, let me see, you guys will see that if you mark out, like pretend this price action right here wasn't here. So like if I just do this, pretend this wasn't here. So this is the midnight opening, and then this is the 6 p.m. open. So ideally you want to buy below both of them. But again, if you're under midnight but above 8 or 6 p.m., it's totally fine as well. And look, if you draw the current range, right, the current daily low to the current daily high, if you're like waking up around here, all you have to do is just buy in discount of the current daily range. That's it. Right. And then we have a fair value gap in what? Discount. That's all you got to do. You don't have to overcomplicate things here. Right. We tap into it. This was a good buy spot right here at 745. And then, you know, you could just wait a little bit too. And we obviously come down again one more time under discount. Right. We tap the 6 p.m. opening price. So my daily bias right here, just from everything we've talked about, draw and liquidity is obviously higher. This would be our new draw right here. Right. We formed relative equal highs, even though we already swept the other draw right there. We also have a bunch of draw and liquidity up here. Now we formed relative equal highs. We're back in discount. We're tapping the 6 p.m. opening price, right? We're below midnight opening price. So you could start to look for longs. You can enter position here, place your stop there under the current daily low. And then you guys will see that, you know, we start pushing up like crazy, right? And then we attack the previous daily high right here, or the Monday high, right? The draw and liquidity, the current weekly high right there. So that's how you can determine your daily bias as well. But hopefully I didn't confuse you guys too much. If you guys found this video a little confusing, let me know. I'll make a part 2 to daily bias. I'll try to simplify it a little more. But yeah, hopefully you guys enjoyed this video. This week is going to be jam-packed with stuff. I might even upload twice in a couple days, like, you know, depending on how many topics I want to cover for the intermediate stuff. But we might upload twice in one of these days during the week, or maybe 2 days during this week. We might upload 2 videos. So get ready. We are going to start diving into advanced concepts very, very soon. It's going to be next week. But yeah, I hope you guys enjoyed this video. I hope I didn't confuse you guys too much. Again, if you guys need any help, or if you guys have any questions, again, I have a free section in the Discord description down below, or the link in the description down below. If you guys have any questions, join the free Discord. If not, if you guys don't want to join, that's perfectly fine. You guys can just comment down in the video in the comment section. So I'll catch you guys later. Catch you guys tomorrow, and peace out, boys.